Hello, everyone. This is the Predictive Playbook, and I am your host, John Ryan. I'm here on Tuesday, and what Tuesday means is I'm here with WagerTalk Steve Merril, and we're sports professional bettors, but we're also speculators in the financial markets for a number of years, probably the same number of years we've been doing the sports stuff. And there are a lot of similarities and syncrasies between the two markets. It's roughly not the same thing, but the processes of how a market determines price is the same as how the sports market determined the betting line. It's just that in the marketplace, it happens a whole lot faster. So welcome to the show, Steve. I trust that you had a good 4th of July holiday weekend.
Yeah, and I got my decorations in the background still, so I figured I'd rock
Good.
that for a few more days. I did some shows for WagerTalk.com yesterday on the 5th, and that was technically the holiday still, so I figured I'd make it count.
Yeah, that's good. Well, I'd say we'll get right to it. The big news really has been that China's going to tighten rules for overseas stock listings. So, I got into that, and that's contributing a little bit to this pullback. But if we take a look at BitCoin here, and I'm going to share the screen right now. Okay. Oh, no, I didn't. Okay, here. Well, you hit the wrong button, and it's just it's always not good, right? All right, so I'm going to make this full screen here. This is Bitcoin for about the last 2 months. And if you look, we've been trading pretty heavy is what I would call this. There's been very few bounces. Of course, the volatility in price, it can go up 5,000, down 5,000. But you can see it's getting heavier and heavier. The peaks are lower and lower. This peak that's the all-time high. Lower peak, lower peak, lower peak. It attempts to rally and it just can't get out of its own way. And today is actually a very negative day, in my opinion, Steve, because we had favorable news over the 3-day weekend and it gapped up. But the problem is that the gap up was actually the high price of the day, and we've been trading down ever since. If this does get some momentum behind it and we take out this low, possibly later today, that's not good. And the story of this picture is telling me it's either you stand aside or you're short and see where this thing goes. But I think there's more, I need to see more capitulation, I guess, to the downside. And I don't know what that is. But it could be as far as 18,000. It could be 22,000. But I think we're going to get a sustained move below 30. What's your take on this?
Yeah, well, I mean, first of all, a couple things. Of course, that gap, as you said, was, after the 2-day layoff over the weekend, as we always had. They closed Friday nights. The future markets opened Sunday, 6 p.m. Eastern. And they did open Sunday, July 4th, 6 p.m. Eastern. Then they closed early Monday the 5th at 2 p.m. Eastern, which doesn't make a lot of sense. If you make somebody go in and work on Sunday night, July 4th, why do you let them out early on the 5th? But that's how they do it. But that's something else. A big takeaway is a lot of the future markets, including the stock exchange, of course, were not open on Monday. So they did not open until this morning at 9:30 a.m. Eastern. And so that's a good 3.5 days for like the grain markets, which gapped lower this morning. The stock market obviously has been off for a while. And yeah, as you said, Bitcoin gapped higher on Sunday night, but it's been straight down since. A little bit of a recovery. And then at about 6 a.m. this morning, that huge drop as well, that big red bar there. And the financial markets also are really moving this morning. The S&P futures were kind of trending the last day and a half, and then when the real market opens at 9:30 a.m. Eastern this morning on Tuesday, instantly down, and the 10-year Treasury note instantly up. Heavy move on the 10-year note higher, which of course means those rates are lower. So the 10-year interest rates are about as low as they've been now in about several months, about 4 months, I believe, since February as of this morning. So something's happening. I've actually been keeping an eye on the international stock markets. They've been dropping for about a week now. The Russell 2000 was down the last couple days, yet the S&P hasn't been down quite yet. The NASDAQ was actually up this morning. I think those are leading indicators. I think the S&P and NASDAQ are the last kind of, power markets there. I think everything looks like it's starting to roll over. I've been waiting for that to happen for 8 or 9 months, and, it hasn't happened yet, but I kind of feel like this is the quiet before the storm.
Yeah, I unfortunately agree with you. This movement right here where my cursor is, that's the engulfing candle that we talk about every single week. And that, again, for new listeners, is a new high from the previous day. You take out the previous day's high, you take out the previous day's low, you close below the low of the previous day. Pretty simple stuff. If you're hearing it for the first time, it's kind of like, what? Higher, high? It's kind of like watching my betting angles on the NBA tip-off show on WagerTalk. But you can see the picture. You higher high, lower low, lower close, and a close below the low of the previous day. And you can see this one was below many days. And that adds more power to that particular candle. And you can see the follow-through was immediate and rapid. That's a big move there. And this is an hourly bar chart. So let me get back to a daily. The dailies are right here. This is a 1-year daily chart. And what you're going to see here is the formation of an engulfing candle. So this is critical right now. And what I've learned over 40 years of doing this, you have the potential here for an engulfing candle, and you need the close be below Friday's close, which was Friday's opening. Friday's low. What was Friday's low? Friday's low was 43.08 on the September S&P 500 futures. So if we get a close below 43.08, what then happens is you might get a 50% retracement max of that candle that we're seeing today. So that would be roughly 50 points, let's say, for example. So you could expect a 25-point move higher tomorrow in the S&P, to which that would be a really optimal place to buy some puts. Puts can be used as hedging for your portfolio. It can be used for a lot of different things. We on this show keep it pretty simple, and it's speculation. Just as if we were speculating on the Phoenix Suns to win the NBA Finals, for example. Not saying we are, but this is what's got my attention now, and it will have my attention up till 4:10 p.m. when they officially close, 4:15 actually. And you would want to bet, or not bet, you would want to consider options that are way out of the money. And what I mean by that, out of the money means that their strike price is down in here. This is a formation that has the potential to drop pretty rapidly. I'm not saying it's going to be a crash, but you could drop quite a bit here, and it really wouldn't destroy the bull trend that's in place. If I draw a trend line from this low, and just eyeballing it up, it comes right in about here. So that would be a move of... that would get people's attention. Just that move. It doesn't look like much on the chart, but that would be about 1,600 Dow points. And now we have taken out the low from the previous day as we see it live. So we're 43.07.25. And Steve, if this continues, I'm not feeling too good about the rest of the week, and especially next Monday.
Well, the other thing we got to mention, too, is I talked about how grains gapped lower. Bitcoin's been up and down, but the two things that have hit me hard is because I've been long for several weeks, if not months now, and my trend following portfolio was the energies today. And natural gas is normally not correlated to anything. It's one of my favorite commodities to trade because it is literally never correlated to anything, including oil. I have it with my energies, but it's really never correlated to oil. Today it was. They both dropped pretty hard, but natural gas really has dropped hard today. Wake up this morning and see it down, and it's down even more as we do this live around noon Eastern on Tuesday, July 6th. And oil is dropping more and more as well. So something's going on. And as I said, the 10-year Treasury interest rate is way down today, about a 4-month low, meaning the rate, meaning the note is up, meaning the rate is down. And then natural gas and oil down hard today, and they've been running with an upward trend for about 3 to 4 months at least. So heavy reversal there. Stock market looks like it's reversing, as you said. S&P and NASDAQ are kind of the laggards. And keep in mind, S&P is the 500, biggest companies. It's by default a trend following mechanism because the winners run and the losers get dropped. And like most trend following systems, it's very top heavy and the winners weigh more. And what is it? I haven't checked it recently, but I know a few months ago, 5 stocks made up like 20 to 25% of the entire S&P 500, which is just insane. So, it's really Apple, Amazon, Netflix, Google, Microsoft. When those companies roll over, it's going to happen fast. And obviously they're doing well, sir. They benefited from the shutdown, but at some point, has that not all been priced in? I mean, how much more upside can there be? And I don't think this whole congressional stuff is going to lead to anything. But keep in mind, the markets are always, as you know, John, several months ahead of the game. And right now it's kind of quiet. It doesn't look like this, break up the antitrust stuff is going to lead to anything. But if that was to happen, say 6 months from now, the markets are going to go now, if not within the next couple months. So just, there is a big elephant in the room with that. I don't think it's going to happen because I think all these politicians are corrupt and they're all in it on together. But, there is bipartisan challenges right now to these mega companies. So we'll see what happens. And that would be the black swan event, which really isn't a black swan event because, I mean, they're in hearings right now talking about it. But I just personally never feel like anything's going to come of it. But, that would be the big thing that could roll over these tech companies. And what would happen then? I mean, they're going to carry everything down with them. And not only that, everybody owns them. So it's like, if they have to start selling everything else or they have to sell other positions to cover. And that's my black swan, my possible black swan event, I guess, for 2021, if you want to predict one.
That's another good word for Tony Finn at Manny's Pub Show today at 4 o'clock is, Tony, your investment term is black swan.
Black swan, yeah. He could run with that one.
Oh, he could. But as you see here, this is a 10-year note. These are the futures. And as Steve accurately said, the prices are going up. Green candles means that the close is higher than the opening for that particular day. And you can see for a while now, the low was made back here. And we've been going laterally, just forming a base. And now that we've taken out the highs of all the way back to here, this tells me that this trend is in place. And any type of modest pullback would be like if I was in the pit back in the day when we used to do hand signals, and yell at each other. Any modest pullback of say 8/30 seconds of a point, which are called, each one of those is called a tick, and it's not to be confused with the tick as in the animal that we all don't like. But they're called ticks. So a tick is 1/32 of a point. So 8 ticks would be a buying opportunity at this point to scale in a pretty good position. And don't be fooled by 10-year notes or 30-year bonds. These things can move a lot. $100,000 bond, every single tick is worth $31.25. So if you bought 10 contracts, that's $1 million. Then all of a sudden it's $312.50 for every 32nd of a move, and it can add up in a hurry. So they're just as risky. Volatility might not be like Bitcoin, but you're just as risky because of the leverage and the violent price behavior that they can go through. Especially as we're thinking black swan. I mean, markets are trying to discount what's going on in those hearings, and that is what's happening today. It's certainly not a feel-good, let's go buy Apple day. It's more of a consolidation and let's make sure we're hedged. And again, those options, OEX put options, the spiders, SPY, are probably the most liquid options in the world. And it's really easy to hedge up, a portfolio that way without selling your stocks, which causes capital gains. And that's a show that would take probably 2 hours, Steve. So I'll get off that boat now. But I wanted to show you a natural gas chart.
By the way, John, on that 10-year real quick, look at that gap. Look, it's about to fill that gap from months ago. I mean, look at these support and resistance lines. That's something else. It really does look like it's breaking out. But yeah, natural gas, as you can see, it's been in a upward trend there for at least 5-6 months.
Yeah.
And
that's a full year.
Yeah, and so you go back maybe 3 months there, right where the purple, right there. And I mean, that's an upward trend there for the last 3 months. And then look at that candle about 5 days ago. I mean, that's like a capitulation, in my opinion.
Yep.
The very next day, look at the next day, capitulates to the exact spot, and then look at today's, capitulates to the exact spot, and none of them could close near the highs. I mean, that's exhaustion right there. So it looks like natural gas is rolling over. Unfortunately for me, it's been on such a run that my trend following method won't have me short for several more days. So I'm going to probably take a decent little loss on this. And people are like, well, why would he stay in if he knows he's going to take a loss on it? Because I don't know. I think I might, but I don't predict. I follow. Right. That's why it's trend following. I'm a follower. I'm not a leader, John Ryan. I'm a follower. But I've made a good chunk on this one, and even if I get out a little bit down here, I'll have a nice chunk from the last 4 months. But just my technician side, it's not looking good, though. I'm not feeling good about being long right now. Let's put it that way.
And the story that we're looking at would make you feel that way, but you're not losing capital. You're losing your maximum profit that was up in here.
Right, and as a trend follower, you will never sell at the high or buy at the low. It's 100% certain. It's actually impossible to do so. And that was something I had to become very comfortable with. And the 20-year learning curve for me hasn't all been about the technicals and the fundamentals. It's been about you got to get the right mindset, and we've talked about this. When we started in the 90s, I was a huge contrarian handicapper in the NFL. That stuff used to work. Doesn't work quite as well now because you just get some really good and some really bad teams that are momentum teams, good and bad. Look at the Diamondbacks, 24 straight road losses. The Orioles, 20 straight road losses in the same first half of the season. And then the Orioles go in and sweep the Astros as almost a 280 dog in 3 straight games last week, and they're playing better. D-backs not so much yet. And I think it was on your show I said blindly play Arizona the next 20 games, will make money. But I said they had to win 2 out of 3. I think that was my disclaimer. And they keep winning 1 and losing 4, winning 1, losing 4. So we're not in yet. We're not in yet on that trade. So, but yeah, I mean, you're never going to buy high or sell. I mean, you're never going to buy low, sell high, but you're also never going to buy high at the worst time and lose 100% because you'll have a quick stop loss. But for people that have been looking at natural gas, I do think it's going to roll over. But it also might just be a short-term 50% correction to like 2 weeks ago. Right down there's a little bit of a bottom where your purple is there. And, that would only be a teeny bit of a hit from here.
Yep. And this candle here, if it takes out the low from Friday, which is 3.598, and it's obviously very close. If this would close just like this is a very bearish inverted hammer. And that would project, moves down into here.
Well, look at the tails on all 3 of those previous days. I talked about the tops, the wicks, but then again, the tails were never taken out either. They're all 3 very consistent. So this really looks like a range-bound market. And to be honest, that's what happens normally when you get big runs in these markets. We've talked about it with Bitcoin. I've said for weeks, if not months here on this show, I thought it was range-bound between 30 and 40. And boy, has that held up. And every time it breaks 40, it comes right down. Every time it hits 30, it goes back. And that's what happens when you have a monster 500% run. And now lumber, by the way, too, is way down. It's starting to turn. It'll probably be range-bound. It'll probably stay in that 700, 800 range. And the S&P's kind of been range-bound as well for months. But if it does break below that range, as we talked about earlier, that's a buyer beware sign. But yeah, if I had to predict, I think natural gas will just be range-bound for a few months from here.
Yeah, that has too much, I guess I would call it organic supply, for lack of a better word.
Right.
Supply and demand will level that out. But the other markets, Bitcoin, I'm trying to pull up lumber here.
Well, keep in mind, lumber and natural gas too, but especially lumber is a true commodity hedge market. I mean, lumber, you're talking about only 200-300 contracts traded per day. It's very small. It gaps open and lower. And my guess would be there's some speculators, and I'm one of them. I've gotten out recently because I just didn't like the gap opens and lows, and it had a nice drop. I missed out on making something there, but I'm going to probably stay out of it now as well because I really think it's going to trend sideways. And there are people that need to hedge lumber, and obviously the real estate market's affected by it. So natural gas, there's some hedging. Probably it's more speculating. That market's so big. But keep in mind, like the grain markets, as I mentioned, corn and wheat gap lower today after being closed for 3.5 days. Those are big speculation markets, as you know, but there's also hedging, the cereal companies and other food companies. So Farmers, exactly. So that's what I love about the commodity markets is that there literally are people that you could take the other side of that want to lose. That's a fantastic opportunity. Because we always talk about there's a winner for every loser in the financial markets. The stock market, everybody wants to win. So you literally have to be smarter than 50% of the money or 50% of the money. I guess the money. It's not necessarily the trades, it's the money. But the commodity markets, there's people that want to lose because they're insurance policies. And you can take the other side of those, which is a nice little edge to have.
Yeah, this is crude oil here. I'll cycle through the commodities you just mentioned. Now this is ugly. There's no sugarcoating this one at all. This is
and John, notice that's like natural gas without the wicks and the support. You see, it's kind of straight up, and now it's really engulfing down.
Yep, and that's a major engulfing candle when it happens at the all-time highs for that contract. This isn't the all-time high for crude.
Several years,
but
though.
It's the all-time high for this trend.
Yeah.
So this is like big. This is the biggest news of anything we've looked at so far. I'll bring up unleaded gas too.
Yeah, and unleaded gas I've been tracking ever since
Same
the gas
thing.
shortage, but it pretty much correlates 90-95% to crude oil. So I only trade crude oil. I don't trade I don't trade gasoline just because they're basically the same contract. Natural gas is by itself, even though they're doing the same thing recently. Natural gas and crude will probably not do the same thing the next month or so. But yeah, I think crude is the one that's more likely to drop while natural gas will trend. And the reason crude will drop is because, first of all, it's up like 100% in the last year or so. And, you know, gasoline was $2 something a gallon a year ago. Now it's $3 something. It's up almost 50% in 1 year. So there's obviously some room for correction in those markets.
Yeah, this is down a ton. It's down 11 cents a gallon, which is, 11 cents, who cares, right? But 11 cents on a commodity that's priced at $2.30 is, this is alarming.
And keep in mind, it's run up higher as the stock markets continue to grind. You would think lower gas prices, lower oil prices is good, but it's not, because that's going to be a commodity indicator that the stock market's going to get scared, because that's going to show things slowing down. A lot of different barometers from that people are not going to like the takeaways of. So
again, with the definition of this engulfing candle, what I found to be successful is you let this finish out today, and then tomorrow you sometimes you don't get a bounce, but you usually get a Fibonacci retracement, 38.2% retracement of this move up to 50% retracement of this entire move today. Those would be the levels that you would expect to find really intensifying selling pressure. But there are days where this could finish here, for example, and then you could have a candle down to here.
Right.
I mean, nobody knows. But rare cases you do have a recovery, and sometimes it takes out the all-time high. But this candle here, I think, definitely favors a small bounce maybe tomorrow, and then it's just a question of following the story and seeing where the story's going to lead us. But what was the other one you were talking about? Well, let's take a look at heating oil, because you can use, if you use heating oil in the Northeast or Pacific Northwest, I mean, this is a tool where you can know when to buy your heating oil for the winter. So here again, a major engulfing candle. We're at 210. I know cashheatingoil.com we mentioned. That serves, I think, every single zip code in the United States and gives you the cash price to have heating oil delivered to your door. And heating oil is basically is diesel. What the trucks use, what pickup trucks use, any diesel engine, it is the same stuff. The difference is that the one has a color added to it to prove that the taxes have been paid on it. There's no taxes on heating oil, so that would be delivered as a clear liquid. And at the pump, you'll see that when you put diesel in your truck, it's colored, and it's usually pink.
Wow. I did not know heating oil was diesel.
Yeah. If you run out of heating oil, you just simply go to the gas station and get 5 gallons of diesel and pour it in, and you can turn your furnace back on.
Good stuff.
And then, of course, there's the crack spread that arbitrageurs use, which is the heating oil, unleaded gas versus crude spread. And I won't pull that up, but that's obviously getting really hammered, because usually you have heating oil and unleaded gas kind of offsetting one another, but here it's just straight down. And then you mentioned
lumber. Yeah, you do either lumber or the grains, because corn is really dropped in wheat, and then lumber's kind of bottom. That's dropped for weeks now. That's already been a 50% correction within weeks. But I find it interesting now. I still worry about inflation. The Fed says it's transitory, but obviously with oil dropping today, natural gas dropping, all the commodities, softs, coffee, cocoa, they all dropped today, cotton. Basically all the commodities dropped hard today, 1% to 2% across the board. I think, keep in mind, we did have a long extended weekend, so I do think, like you said, we'll see a little bit of a bounce up on those tomorrow. If they all drop hard again tomorrow, that's a really sign that they're running, because I would think tomorrow's going to be a quiet day before the storm. But yeah, everything basically down today. Now lumber kind of bottomed and was up a teeny bit, but that one has run tremendously down while the other commodities haven't. And lumber, once again, is not correlated to anything. It's like natural gas. Bitcoin, lumber, and natural gas are my three offset. You could trade as separate markets. Obviously I group lumber with softs like with the other commodities, but it's not. It's a standalone. Natural gas is a standalone, and so is Bitcoin for the most part. I mean, I've yet to see Bitcoin really correlate to anything long term. So we'll see how that plays out. But yeah, the commodities are really dropping today, including oil and everything that we just looked at. So something's happening. I think tomorrow's going to be, my prediction is tomorrow's going to be a quiet day, but we'll see.
Soybean meal.
Any of them will work. I mean,
corn.
do corn if you have it. Corn's a big one, and it really dropped hard. Yeah, you'll see that gap. Just look at that overall. It's just crazy.
Yeah, when farmers sell as a hedge, they're locking in their product. They're locking in the margins so that no matter what happens to the price, they know that they're making X when they execute that hedge.
Right.
And that's why Steve said that that particular part of the position, they do want it to go down because then they've hedged it at the optimal price.
What's an insurance policy? I mean, think about it on your house. Like everyone's like, oh, I lost $2,000 this year because I paid for insurance and didn't need it. Yeah, well, you also, depending on the cost of your house, saved $200,000, $300,000, $400,000 because it didn't burn down. Like you want to lose on your homeowner insurance policy every year because if you have to call it in, something bad happened. So that's how these farmers look at it. I mean, it's an insurance policy on their prices when they go to market 6 months later or whatever.
Yep. And this is soybeans. Soybeans is the more actively traded of the what I would say is the big three. You have wheat, corn, soybeans, and oats. Oats trades the less amount, but soybeans is the biggest of the grains for sure. And that chart there isn't a pretty picture either. There's a whole lot more red than there is green recently, and there's probably not an opportunity to do anything here, because it's already moved quite a bit. And what is it at? 1304. So that that means that the crop itself that will be harvested in November, or for November delivery, which is November futures we're looking at, which is the lead contract. This tells me that the crop is not doing well in the Midwest, and then demand on top of it is waning. Because of any recent news that we've heard is indicating that, and that's why it's happening. So, 13, even though that's on the low, that's a high price for soybeans historically. So actually, reverse statement, this move here actually indicates that the crop is doing better than expected back here.
Pull up a weekly if you have them. You'll see how much these have run. That's like you said, it's still very high historically because you'll see how much this has run since the COVID shutdowns. I mean, look at that.
Here's the beginning. See? And then, kind of chops around, then you get planning. Bang. But
so
again,
you basically have a 50%.
Candle.
I mean, almost looking at a 50% retracement from that low.
Yep.
Yeah. Engulfing candle. Yeah, look at that green engulfing candle. That's a very unusual pattern. There, you got two reds on each side of a green engulfing. I don't even know what you'd call that. It's like a sandwich. We might be making our own new. I've not seen a chart formation like that very often.
I'm thinking, Steve, but I'll make sure I mention it on the Manny's Pub show today. I think it's Three Old Crows.
I was going to say that's a very unusual.
I think that's what that is, but I could be wrong. But again, that'd be a word for Tony Finn to.
Three Old Crows.
Three Old Crows. So let's check Bitcoin before we take off here. So this is a weekly.
The weeklies are great to look at, though. Like we've talked about, like what you like to do is I like to look at the daily and the weeklies. It kind of puts things. It helps you really find some good support resistance levels and put things in a big picture. And what you want to see is when they converge. When a daily and a weekly level both converge is what I think is extra powerful.
And this, is probably the best looking story of the ugly stories that we've been looking at, and this is Bitcoin, because it hasn't taken out the 30,000 level yet, but it keeps making lower lows, and the peaks are lower. So the
trend line is still
cautious
very
at
down.
best. And then lastly, let's just take a quick look at the SPOOs, as they were once called in the pit.
I mean, that's a pretty uptrend for a year now. I mean, it's a textbook uptrend, slow and steady, and it just doesn't seem. It's that roller coaster I talk about. That's exactly how a roller coaster goes up, and then when it goes down, 10 times faster and more extreme. And that S&P chart just looks like a high rising roller coaster that's about to hit the peak.
Yeah, and as always, we like to be cautious with anybody that's listening too. We're not licensed, certified financial planners. We do know quite a bit about the markets, and these are our opinions. And if you like our opinions, that's great. You can give us a like on the YouTube channel and tell your friends about it. But make sure you get to your financial planner before you engage in this type of stuff. This is risk and speculation that is second to none. And
it's not even financial. It's trading. It's
right.
It's not. It's kind of day trading. We're more swing traders. A day trader is someone that's in and out every day. We're swing traders. John and I are in for 2 or 3 week periods. Financial investor is going to have you in for the next 10 to 15 years. So it's a totally different. But it doesn't mean it's not a form of investment, because it is. Investment's about making money, and our trading makes money. But once again, we're not. This isn't buy and hold. These are swing trades, and these are where we think the markets are going for short-term traders. But once again, I always forget to give that disclaimer because we're not financial investors, but I forget that some people might not understand that. So exactly right.
Yeah.
These are our opinions and our recommendations, what we're doing with our own funds, not necessarily what we're telling you to do.
Correct. Yep. Just real last one on this one. This is the Aussie dollar. So when it's going down like this, the dollar is actually going up in value against the Australian currency. And this is a very interesting situation because you have the engulfing candle to buy the Aussie. Dollar gets weaker, which also means the dollar gets weaker because interest rates are going down here in the United States. So that whole thing makes sense to me. And you have this huge inverted hammer now forming. But again, you're right at about the 50% level.
Look at that wick though, at the very top of the high, like 5 days earlier, right there, and he couldn't break it.
Yep.
Came down hard. If it breaks below the close of that green or the red before it, and pull up a weekly, because it's up, if I'm not mistaken, this is still up a lot. It's still up a lot. So there's a lot of downside on the weekly. That looks like a short-term break on a long-term. Yeah, see?
This is bottom of COVID.
I really think there's some downside to that chart. It looks like it's rolling over. Look, it almost is like a triple top, head and shoulders, whatever you want to call it.
Yep.
And that's the neckline. Those last 3 or 4 bars, those lows are the neckline.
And again, another engulfing candle. Go figure. Right at the all-time high.
The all-time
high. The move of the
last couple years. Yeah, the last couple years. Yeah, several year high, which is even a monthly high is important, but a multi-year high, and that's what we had, by the way, in oil today also, is at least a 1 year, if not a multi-year high, I believe. So, or a couple days ago.
That's big stuff.
It is.
Yeah, so see, I'll remove that. So, another great show, Steve. I got another one coming up here with Jesse Schul of sportsmemo.com. He's going to talk about the NBA Finals, which I would love to talk to you about, but we're out of time. But real quick, I mean, just do you have a team?
Well, I'll do this real quick. Obviously, Giannis's injury doesn't look like he's playing tonight. But one thing, when the Suns made the finals last week, before the matchup was known, the MVP odds came up in a lot of spots, and I saw Chris Paul 2-1, Devin Booker 2-1, and then within the next day, Paul was like 160, 170, Booker was 230, and I think the logic there, and now Chris Paul is a good size favorite, is that if the Suns win, it's kind of the old MVP in the Super Bowl thing where the quarterback always gets it or Brady gets it. All things equal, unless Booker is tremendously better, they're going to give it to Chris Paul for sentiment. We talk about sentiment in the market. This is sentiment in the voting for the MVP finals. So I think it makes a lot of sense that Chris Paul is the favorite. And, instead of playing the Suns at minus 195, if you like the Suns to win the title, I wouldn't put it all on Chris Paul because Booker, Eaton, some guys could win it other than him. But he just had the COVID scare, so he's probably safe from getting COVID again, right? So you got that little hedge as well. And Booker, Eaton, they could all test positive and be out, although they probably don't win if one of them is out. But, I think you put a little bit of your play, instead of a one-unit play in the Suns, if you like them, put a little bit of plus money on Chris Paul because I think that's why those odds have dropped. They dropped pretty quickly. The odds makers opened him and Booker even, and boom, they split within about a day before the Bucks had even won the series. So I think that's what we're seeing going on there. But yeah, Giannis is day to day. I don't think he's going to be healthy either way. And we saw Trae Young come back after missing 2 games. He was 4 for 17. So bringing a superstar back less than 100% isn't the best thing in the world. So I think the Bucks are probably up against it, although they've won 2 without him. So we'll see what happens.
It'll be fun to watch tonight, that's for sure. And guys and gals, be sure to watch Steve Merril. He hosts a lot of shows over at WagerTalk. He's a guest on a lot of shows as well. He's on Sirius XM 204, both as a guest and a host, I believe. So obviously he's a worthwhile guy to get your sports betting information too. So thanks for being on the show, Steve. We'll look forward to having you on again next Tuesday. And we're looking to add a few noteworthy people to this show. And I think that is going to happen here over the next couple of weeks. So we're looking to expand the coverage with more interesting takes on how we take a look at these pictures. It's like going to a museum, and not everybody sees the same thing when you look at the picture. You know, somebody would say, "My God, that's beautiful," and another person would say, "What? It's the ugliest thing I've ever saw."
Well, you know what's interesting about that, though, is on the Bitcoin chart, though, people sometimes see what they want to see. And it's been in that 30 to 40,000 range. You and I have been short. We're comfortable being short still. But those people that hold Bitcoin, they're like, it'll break. It'll go above 40. They see what they want to see, which is kind of how life works. But, yeah, next week, the All-Star break. So let's get a little extra financial content on Sports Memo and WagerTalk.com. And most importantly, like, subscribe to the channel, comment below. But most importantly, share this video with other people who like the financial markets. Anybody watching now, the way we grow these shows and get more financial guests is to have more viewers. So share this with any of your friends, even if they click on it just to watch for 2 seconds. The views really help. The likes, the subscribes, the comments. So share, share, share. That's what each and every one of you can do that's watching today.
It's awesome, Steve. Well said. And on behalf of Steve, myself, and the Predictive Playbook and WagerTalk.com, SportsMemo.com, may all the wins be yours.